Hey, good morning, everyone. It's Wednesday, the 26th of February. February's almost over. We got, I guess, the rest of this week, and then we're rolling into March. And I've been away for a while, right? We haven't done these updates in a while. Last time was the stream on Thursday where I was starting to get sick, like kind of sick then, but then I got super sick. So I've been pretty ill for the last week or so, and still not 100%. So this nasty, nasty bug going around. So let's see. This is my second day in front of the computer for about a week now. Not even second full day. Yesterday I lasted a few hours. And just in time, right? Just in time as everything is, excuse me, seemingly collapsing in front of us here. We've had multiple red days here, pretty aggressive downside in the overall market. And a lot of people are crying wolf already. They're like, hey, I knew it was over. Everything's going to collapse. Like it's finished. The R word is getting tossed around, recession this, recession that. But the way I see it is that this is a seasonal pullback that we have to expect towards the end of Q1 when markets get a little weaker. We also have the end of the month that's coming up on Friday. And a lot of things do point to the downside right now for better buying opportunities. I see this as still being in a strong bull market where the buy side over the last few weeks picked up prices on weaker volume. And I think that it happened very, very quickly where we need to recalibrate some of that value and find better buying at lower prices, which I think is what's going on right now in these current circumstances. One of the other big things is that tech was very, very weak over the last several weeks. One might say, right, with a failure coming at the beginning of February, even towards the beginning of February, where things peaked out, and a lot of big tech names had peaked out even before that. As we saw with Tesla, for instance, Microsoft has just not been the same. The most recent earnings on Google, right, took things to the downside. And finally, a lot of the other names had followed suit. So, oh my God. So, realistically, big tech was one of the driving forces to see some downside momentum where I think that realistically we're getting into a position or very close to a position where prices are oversold, and we're expecting to see some kind of aggressive turning point, which is what I'll be looking for in the coming weeks as this downside kind of fizzles out. So there could be a little more. I'm not saying it's over, but I think that we are very close to some kind of turning point where we do try to gun for highs yet again. Morning, Stuart. Thanks, Laura. It's been a tough week here. I haven't been sick like this in a very, very long time, so I hope everyone's okay. But in terms of some of the other news, right, a budget blueprint has been cleared by the Republican-led House of Representatives, the first step towards advancing President Trump's plan to cut taxes naturally, as well as increase fund for border security and the military. So the proposal was passed by a narrow 217 to 215, with all Republicans but one voting for the measure and Democrats rejecting it. One Democrat did not vote. The plan calls for a $4.5 trillion cut in tax. Excuse me. Still not able to talk that for an extended period of time. So, which will include a renewal of cuts Trump introduced in 2017 that are set to expire at the end of the year. And the plan also calls for cutting federal spending by $2 trillion over 10 years. To note, it instructs the Energy and Commerce Committee, which oversees Medicare and Medicaid, to find at least $880 billion in cuts. And House Speaker Mike Johnson has insisted that the budget proposals aim to root out fraud, waste, and abuse in Medicare or Medicaid. As for the national debt, which is currently more than $36.5 trillion, the House proposal calls to raise the debt ceiling by $4 trillion. According to a think tank Center on Budget and Policy Priorities, the debt limit will likely be reached in November 2026, with even this $4 trillion increase In that case, the Treasury Department would have to resort to extraordinary measures to pay government obligations. So we'll see how that kind of sets. The next thing to look at is the House vote is viewed as procedural, as the Senate last week voted for a contrasting budget blueprint. The Senate proposal does not include tax cuts or raising the debt ceiling, and the House and Senate will need to reach an agreement to draft a legislation which could take months and further divide lawmakers. And the current government funding is set to expire March 14th. So there's things to consider from that faculty as well as the Fed that are going to influence the price movement in the coming weeks, most definitely. But one of the things that we have to consider today that is going to shape up movement and the expected volatility in the market is NVDA. NVDA earnings are set out to come after the bell. This is the final of the Mag 7 names that's due this quarter. And the results are widely expected, right? We also are expecting to see how they talk about this DeepSeek and the DeepSeek fears. We'll see how that sets up. But last time we had earnings, NVIDIA didn't move too move too much from them. But this time around, I think that there's more at stake. So we're going to be expecting some kind of decent move that happens on NVIDIA. I don't know whether it's up or down right now, but we're trying to gap up and start turning price around here pre-market. We'll see how long that lasts, because over the last several days here, the general consensus of the market was open, start selling regardless of the gap and movement higher, and continue on with the downside press. Now, I'm not saying that we're fully, completely done with all the selling. I think that they're still in the driver's seat, but it's going to be something that we do have to consider as starting to come to an end in the coming days or weeks here. But right now, there's still some general worry about this downside. So a major pivot, 59.90 to 95, where the S&P right now is hovering. If we manage to hold this, which we're about to pretty much close at for the ETH or reopen the RTH session at that area, it doesn't really give me too much information. I would need to see an expansion either above or below. So if we do actually start expanding below and moving back into the distribution lower, what happens is I do have the expectancy to see a larger pull down. Yesterday, 59.25, 59.30 was a major area that we talked about, which is the bottom of the distribution. Expected target is where the market actually flipped from. But right now, the pivotal aspect for the buy side to continue is constant bidding above 59.90 and especially the movement above 60.15. So those are two pivotal areas that would do extremely well for the market to actually start seeing the flip. Otherwise, I'm not too convinced, where, like I've said, we've seen multiple days that have downside momentum right off the open. And if that's the case today, then be very careful on that buy side. That's all I have. We'll try to do it again tomorrow, but my voice is still messed up. We'll take it step by step, and ideally by next week we'll be back in full force. See how long I can talk. Right now, not very long. We're at 8 minutes, and I'm starting to die off. So hope everyone has a fantastic trading day, fantastic trading week, and we'll do this again tomorrow. Remember to check out